Okay, morning all. Today we're going to look at the DEB 2017 sole trader account, and we're just going to look at a few small parts of it, the suspense entries and the investment interest due and mortgage interest due. So I don't have a paper version of this question, so I'm just going to be looking at the electronic version here. In order to do those little sections of it, what I've done is I've created part of a trading profit and loss and balance sheet, just putting in the things that you would put in at the very beginning when you're taking all of the information from the trial balance here and beginning your workings. Okay, so I didn't put everything in, just things that I'll need for these workings. So you'll notice the insurance, because that's what where the suspense is included in. Discount, because they discuss discount in the suspense account. Investment income and mortgage interest. Now, there wasn't any figure so far given for investment income that you received so far, but there was a figure for mortgage interest received. Patents, I put that in there because there was a mention that included in patents there is investment income received, investment income due because we'll need that later, mortgage interest due because we'll need that later, and in the finance buy section I put in the drawings because there's some entry as well that mentions about how some of the premises and the mortgage interest that you're paying on the mortgage of the premises should be for private purposes. So we'll need the drawings entry soon as well. Okay, so to get started, let's just look at the first item we need here. And that would be patents which incorporate 3 months investment income are to be written off over a 5-year period. So since it mentions investment income, we'll do that. And I've already done some of the workings here. So it says, well, I better get back to the question here actually. It says patents including, where are we? Patents, here it is, includes 3 months mortgage interest. And here we have the, investment interest. Where's my investments? Oh yeah, 4% investments. Here we are, 1st of the 9th, 2016. So it's funny actually because you only have the investments for the last 4 months of the year, but 3 of those 4 months anyway, it says investment interest has been received and is included in the patents. So what I've done is down here, I've done some workings where I calculated 4% of the cost of the investments by 3/12 for the 3 months that you've received already, and just I calculated the 4 months for what you should be receiving altogether because we'll need that later on. So for a start though, what do I do with that 3 months? Well, it was included in patents and we know that we must, to take it out, we must add it on. So plus 1,500, that's the usual thing we do. And over here then, investment income, we can start now. We have a figure to put in here, 1,500. And we can see that everything should balance because investment income is a gain, so that'll make the net profit. If I write it down here, net profit, even though I don't have a figure for it, it'll make that bigger, which makes the bottom half of the balance sheet bigger, and adding the 1,500 onto the patents here will make the top half of the balance sheet bigger, so everything will balance. Right, the next thing then is, let's go down through the additional information here and see what we've got. That doesn't matter, so we're onto the suspense, part 4. It says the suspense figure arises as a result of the incorrect figure for mortgage interest, although the correct entry had been made in the bank account. So, what have we got so far for mortgage interest? Let's see if we can find it. Oh yeah, mortgage interest paid for the first 4 months, 3,300. Okay, and that's the figure that we've already put into our account straight from the trial balance. But it says that's incorrect. So let's just see what mortgage interest for the first 4 months should come to if that's not the correct figure. So it says here 6% mortgage, including an increase of 80,000 rather, received on the 1st of the 5th, 2016. So this figure, 260,000, went up. It went up to 260,000 on the 1st of the 5th. Before that, it was 80,000 less. It was 180,000, and then it went up by 80 up to 260,000 on the 1st of the 5th. So that means for the first 4 months, it was 180,000. So that's the figure we're going to use first, and I've done the calculation for that down here. 180,000 by 6 months, or by 6% rather, by 4/12 for 4 months, and that's 3,600. So this mortgage interest figure here should not have been 3,300. It should have been 3,600. So in order to make that 3,600, we must add 300. Now, the issue is, though, that was, if we again scroll down a small bit here, the suspense figure arises because of that mistake, and the suspense is included in or incorporated in insurance. So it means we must adjust our insurance figure as well to ensure that our accounts are still balanced. So if the mortgage interest goes up by 300 euros, that means your net profit will go down by 300 euros. So in order to counteract that net profit going down by 300 euros, what we're going to do is we're going to subtract 300 from the insurance, thereby reducing your expenses, thereby increasing your net profit again by 300 euros. So everything stays balanced. And that's the first part of the suspense item dealt with. The second part then says, let's see, where were we? Expense figure, mortgage interest, correct entry made in the bank account, and discount received 400 entered only in the creditor's account. Okay, so discount received entered only in the creditor's account. So the two accounts that should have been entered in are the creditor's account and the discount account. So it wasn't entered in the discount account, and it was a discount received. Now, I suppose what might catch out a lot of students here is that the discount here, in a lot of the questions, it tends to be on the credit side. It tends to be a gain, and then therefore it tends to represent discount received, or that the discounts received were greater than the discounts allowed by whatever amount was in here. But when it's on the debit side here, it means that this is you can regard it as a discount allowed, or that the difference between the discount alloweds and the discount received was 3,700, that the discount alloweds were 3,700 more than the discount received. So that's why this figure, in the first place, we had to put it in with the expenses instead of down here somewhere in the other operating income with the gains. So it's an expense this time round. So then what happens is, if you have another discount received of 400 that you didn't enter in the discount account, well, what effect does that have on these discount alloweds? Well, if it's a discount received, you can write it off against your discount alloweds, thereby reducing your discount alloweds by 400. Okay, so if that discount allowed, or discount allowed goes down by 400, what effect does that have on the net profit? Well, it's an expense that's going down by 400, so the net profit is getting bigger by 400. So up here then, if we want to again reduce our net profit by 400, we got to make this expense bigger by 400. So we reduced an expense here, we're increasing an expense here, and then everything should balance again just fine. Okay, that's the next thing. Now, let's see what else we've got here as we go down through. We've got the suspense done, and skip the next one. Yes, this one here. Provision to be made for mortgage interest due, and then 20% of mortgage interest refers to the private section. So if we do the mortgage interest due bit first. So the mortgage interest was, where were we? Here. We had 180,000 for the first 4 months, and I just did this calculation. Then it went up by 80,000. We saw from the trial balance up to 260,000. So if we get the other 8 months of the mortgage interest for the year, it works out to be 10,400. So your total bill for the year is 3,600 plus 10,400, which is 14,000. Now, if you have already got 3,600 in, which we have here, 3,300 plus 300, then we want to put in the further 10,400, which is the bill for the year. So we put that in first, plus 10,400. And then to balance that, of course, then, because mortgage interest will reduce your net profit, which will reduce the bottom part of your balance sheet, our mortgage interest due over here must go up by 10,400. Okay, and then everything will be balanced again, because that will be subtracted from current assets and it'll reduce the top part of your balance sheet. So that's all fine so far. So that would be ordinarily it done, except for the extra bit here we've got, where it says 20% of mortgage interest for the year refers to the private section of the building. So what we've got to do then is, we've got to take that total figure of 14,000 and we've got to work out what 20% of it is, because 20% of it is going to be for drawings, and that's 2,800 it works out to be. So we only show the, I suppose, the bills for the company or the expenses for the company in a trading profit and loss. We don't show the private expenses. So we must reduce this mortgage interest by this 2,800 figure here. So minus 2,800. And that should be it really. You could calculate it then and put in your mortgage interest figure. So minus 2,800 there. But in order to balance that, we have to put something into the drawings here, and that's a plus 2,800. And will that balance? Well, if we reduced our mortgage interest by 2,800 here, that will increase our net profit, which increases the bottom part here by 2,800. But if you put 2,800 into the drawings, which you always subtract from your capital and reserves, then it will decrease the bottom part by 2,800 again, thereby keeping everything balanced as it was before. And that should be all of the mortgage interest done then. So on to the investment income then, and investment income due. We have, so far we've worked out that the investment income for the first 3 months, which was included in patents, is 1,500. We know that there were only 4 months of the year that you owned those investments for, because you purchased them on the 1st of the 9th, you got them late in the year. So the total amount of your investment income that you should have received for the year is this 2,000. If you've already received 1,500, then you only have 500 more to receive. So we'll put the other 500 in here, because it's what you ought to be receiving that goes into this trading profit and loss account. So 500 in there, and you haven't received that 500 yet, so that's investment income that's due to you. So that 500 also goes in as a current asset over in the balance sheet. And again, if we look at what's happening here, that means that your net profit will increase by 500, thereby the bottom half of the balance sheet gets bigger by 500. Putting 500 into the assets up here means the top half of the balance sheet increases by 500, and therefore everything stays balanced as before.